I usually have the rest of the gang checking this, but I've been known to occasionally for the tech not to work, and it's never my fault, of course. But we all know that. Hang on a minute, let me just check. It's on YouTube. We're trying out some more extra technology where we can do simultaneously. Not sure if it's going or not. Yeah. So, hang on. Live streaming this. Okay, so I've done everything I can, and if it doesn't work, that's Nishit's problem, he says. All right, anyway, we're gonna, sorry, mate. All right, we're gonna have to go. Hopefully this is live streaming. Right, so welcome to another super interesting program on the property professionals. So my name's Dill, Piewall Guy. I think we're live. Okay, we're having tech challenges. Don't know. Don't ask me. The tech department will sort it out. Right. Anyway, they probably didn't put enough 50p's in the meter. Right. Every Thursday we bring you a program with professionals in the property industry, and sometimes they bring me along as well. So that's a different story. Today we've got someone really smart, intelligent, and great. Yeah, obviously, apart from me, right? We've got Akhil Mir. He's really good at his stuff. Quick introduction. Used to work in the financial industry, does mortgages, knows his stuff. That's just the start of it. I might get him to give us a little intro because I know I haven't done it justice as with everything. But yeah, Akhil really does know his stuff. I've had lots of conversations with him. We've done various presentations on each other's stuff. I can promise you he knows his stuff. Mortgage broker, deals with buy-to-lets at least, definitely construction, really understands the construction space, the law, all the stuff around it. And he's so good at his subject. I've even put the 50p's in for him. He can share his slides for later. So we've spared no expense. Akhil, my good friend, if you can give us a quick rundown of I know you won't even do it justice, but just a quick rundown of what you do and so on. And then we've got some questions coming in that we can kick off with. So over to you, sir.
Perfect. Thank you, Dill, for a lovely and fun introduction to myself. So as Dill said, my name is Akhil Mir. I'm the owner and principal at Our Mortgage Broker. Who are Our Mortgage Broker? We're a specialist real estate finance brokerage, specializing in all types of real estate finance. So whether you're a first-time buyer, a buy-to-let landlord, a commercial property investor, we have the experience and the know-how to find you solutions. And we're not just mortgage brokers here. We're here to build relationships with all our clients, advise them with the most suitable types of mortgage and insurance as well. People normally do forget with mortgages, you do need life cover. It's not contractual, but what we always suggest is if you're part of a family, you leave, everyone's going to go tomorrow, but you've got to have enough life cover in the background to support your loved ones, because the debt, i.e. Yeah, okay, deal. I think I'm unmuted now. So yeah, so we help all our clients with mortgages and including life cover. We're already as good as our last deal. So for us, our business is grown organically through our reputation, through clients coming back to using us. And again, I'm only as good as the team around me. So we're a team of 7 mortgage brokers within the business. So I'm grateful for the team that I've got around me, because the foundations are strong and the rest will take care of itself. And the other part of our business is relationships, and that's key in this business, because without the likes of Dill, who is our go-to party wall surveyor, we can't help our clients. And the best way to advise our clients is ensuring them that we support them with the best advisors in the business. So whether that is, as I said, party wall surveying, it's an accountant, it's a solicitor, it's an architect, it's a planning consultant, we like to know and we like to work with people that we like, know, and trust. So it's paramount that we know that it's not necessary that every client needs mortgages on day one, because they may be cash rich or they might have inherited property, but they may need an accountant, they might need a planning consultant because they want to develop a property and so on. But for us, it's about relationships and ensuring that we've got the right resources to hand to best educate and advise our clients going forward. Deal, you're on mute. That's common in Zoom, isn't it? You're on mute.
Yeah, I thought you were going to let me carry on and just save the audience. So sorry. We're not late enough or on a weekend session somewhere to have those jokes just yet. So that's a different time actually. It's been a while since we've been together physically. In a social meeting, of course, none of the other stuff. Anyway, right. So, question for you. We've got a couple of questions coming in, and I've got some from that I've had before. So, how are you finding residential and commercial property valuations? Are they living up to investor expectations? What's your view on the lie of the land out there? From the horse's mouth, almost, I'm guessing, yeah.
Yeah, no. So it's everyone wants the highest valuations when they're remortgaging their property, or when they've added value to it. Everyone thinks that their property is worth the most amount. Now, that might be very true, but it may not be true. So in my experience, to be honest with you, you probably see 1 or 2 out of 10 downgraded valuations. And that's not set in stone. And what that might mean is that the surveyor that went out didn't necessarily understand the before and after picture, and they didn't take into account, any major works that might have been carried out. So it's fundamental that if you're going for a remortgage, and in particular, you've added value to properties using permitted development or planning permission and so on, you've got to talk to the surveyor about what the property looked like prior and what you've done to it. Because as the property owner, you'll know how much blood, sweat, and tears have been into the property. You can explain all the nuances that were part of that property and how you've overcome them, and that's why the property is all glorious and glamorous today. The other thing I always suggest is to have market comparables as well. So if you think your property is worth 1 million, for example, how have you come to that value? And the best way of doing that is looking at the local market within the close vicinity to say properties have been sold for in a similar spec for 1 million as well, or fetched over 1 million. So it's good to have real life examples. And in terms of radius, I would say go around about up to a mile away, and it's got to be of a similar spec. But in short, surveyors have been they've been paramount to all our business anyway, and no doubt they're fundamentally part of the business and the whole process. So I'll give credit where it's due. There's only very small percentage of properties that get down valued, but again, we can have that conversation with the surveyor and the lender to make them see sense. Sometimes we may need to appeal it and come back with more market comparables, but on the vast majority of cases, I would say no issues whatsoever on residential or commercial valuations.
Yeah, no, that's some really good advice in terms of, I guess what you're saying is do some of the groundwork for the surveyor, make it easy for them.
Yeah.
These are valuation surveyors, so you make it easy for them. And that's some great tips in there, in that you say, these are the works we've done, these are the comparables. Obviously, they're going to do what they're going to do, but it just shows you the level of experience you've got, that you're saying do some groundwork for them and make it.
Yeah. Don't teach them how to suck eggs. You don't want to do their job or think that you're the surveyor, but in a nice, persuasive manner to say, this is what it would look like. So it's good to have the before and after pictures. A lot of developers are busy in their day job and they forget to take pictures, or they forget to, when they open the doors to the surveyor, bring in your schedule of works, explain to them how much you spent, the time frames things took, and then it brings it to life. Every room, every 3-bed semi looks virtually the same, but tell them how you created this amazing property, and that's why you stand for the value that you set it at.
Yeah, no, there's some great tips. So, when we go and we don't do valuations, but when we go and do surveys, in the end, forget every property looking the same. one white wall looks same as another one, and we've got systems to how we demarket. So that's a great tip. So and that's super in terms of, you're saying that the lenders you work with, you can always ask for what did you just use, reappraisal or just a heads up there?
Yeah, you can ask for reappraisal. So if you think your house is worth $1 million, but the surveyor came back and said it's worth 800, and for whatever reason it doesn't fit with our mortgage requirement, and i.e. the loan required, then we can appeal it. So lenders doesn't mean it's a no on first attempt. We can appeal the decision, but then that's where your mortgage broker will come into play to work with the applicant and the surveyor and lender to say, well, this is how we've come to that 1 million conclusion, and here's the reasoning why and the supporting information. So it's paramount that we don't just stick a finger in the wall, in the sky, and say it's worth $1 million. We want to have hard facts to back it up as well, because we don't want to waste time, Yeah,
no, and this is where a broker surveyor relationship is useful, and that's what I'm guessing you guys have worked hard on. What type of tenancies are lenders focusing on at the moment? Is there a certain thing that they're strong on, certain thing they're weak on? What's their favorites?
So the beauty is, the lenders, during COVID, a lot of lenders backed away from higher loan to values. A lot of products were taken off the shelves because of the adjustment from working from home, the mortgage payment holidays, and so on. What we've seen since the turn of 2021 predominantly is, higher loan to values back to where they were pre-COVID. Even more mortgage products available on the market. And the beauty is now a lot of buy-to-let lenders in particular are offering all types of mortgage deals. So whether it's HMO, whether it's social housing, whether it's student accommodation, Airbnb mortgages, multi-unit freehold block mortgages, all these types of mortgages are openly available, including first-time buyer, first-time landlord mortgages as well. So I always say to my clients, there is 99% of the time a solution for you. Sometimes you might need to pay a bit more, because it might be your first buy-to-let property, you've got no experience, you might have low income, you might have an adverse checkered credit history, so you've got to pay for that. But the beauty is the market is extremely liquid, lenders are willing to lend, obviously doing it responsibly, but that's where we play a pivotal part as independent and directly authorized mortgage brokers. We've got access to the entire market, and that gives our client support, benefit that we are actually looking at from a holistic point of view. And we always say to our clients, usually you'll know the high street lenders only, but we know in our experience, the high street lenders don't suit every type of tenancy. Most of them don't like HMOs, for example. So that's where we play a pivotal part to understand the markets, the full market sourcing in terms of rates, where the best rates lie. And it's not always the cheapest fits all, because a lot of properties have different nuances. A lot of applicants have different types of income that lenders take into consideration. So, that's another reason why to use a mortgage broker. But the beauty is the market is extremely liquid, and lenders are willing to support most applications for sure.
Brilliant. Akhil, as I usually say this at the start of an interview, and I think this is definitely time for it. Listen, put away your colouring pencils, get your pens and pencils out and take some notes, because this is some good stuff coming out of someone who's in the industry and getting you the money. So get your pens out, take some great notes, some great stuff coming out here. What's the typical application on a mortgage offer timescale? What's the timescale? And have you noticed that the underwriting process has changed pre the dreaded COVID and now? Have you noticed any changes there?
So what I would say is the time frame of getting mortgages over the line is shortening. And the reason for that is because the lenders are now in a position where they've got, they're at full capacity with regards to staffing and how they're working remotely or back in the offices. So we haven't got a huge issue around underwriting timescales. Where I would say that the delay usually happens is when the application is not packaged well enough. And what that means in my language, as in a broker language, is providing the lender with relevant supporting documents on day one. So, Deal, you'll come to me and say, okay, I want to apply for a buy-to-let mortgage for this property. I should, on the same day, send the lender the minimum requirements that I know the lender will require. I don't like to send them too much information because it's not required or it's never been asked for. So I know the vast majority of lenders will require certain documentation, and I should have them on hand as soon as I'm ready to submit your application. And what that means is when the underwriter picks up your application to review and underwrite, they can then link back information to what I've keyed on the application. So if I said Joe Bloggs is self-employed, have I attached the tax calculations? Have I attached tax year overviews? If they're a portfolio landlord, have I completed a property schedule in the lender's format? And this just helps the lender underwrite the mortgage application more effectively and efficiently, and it saves the toing and throwing between myself, the client, and the lender. So what I would say is the application to offer, mortgage offer, the timescales are reducing for the good, for the better. But again, it's how you prepare your application will see it through as quick as possible.
Yeah, no, that's interesting, because casting back my mind to the horrors of last year, early last year, I guess.
Yeah.
I remember all you brokers were sort of like rushed off your feet, whereas us guys were saying we've got nothing to do now, because
nothing's changed, to be honest. We're still super busy. As you can see, I'm in the office till now, but we're going to be here for another few hours at least. So we are fortunate in the business that we're in. COVID is, it's a horrendous pandemic, and we want it to disappear as soon as possible. But from a housing and a brokerage perspective, we haven't done too bad, I would say. So we're grateful for that.
Yeah, but I'm guessing that compared to last year, where I guess every organization didn't actually know what to do and couldn't handle the working from home change.
Correct.
There's been a difference from the lenders. Now they can deal with it.
There was, I would say the first month, there was a bit of chaos, and that was expected. Surveyors couldn't go to properties. Lenders had to make people work from home, so IT was an issue. But from a local experience, our firm, all our information is all in the cloud. We can work remotely. I can work on a sunny beach in Dubai, or I can work in London in our offices. So we have no issue there from that perspective. But I think that's why those businesses have had to evolve and pivot, and I think they've done it. They should have put those practices into play now. If any of this pandemic ever came back around again, then they should have everything in place to ensure that there's no delays furthermore.
So when you're off in a sunny beach, let me know, and we can do a Zoom from there. Actually, that's a fantastic idea. We'll keep everybody posted on that one when we're doing a presentation from a sunny beach, just to rub it in. I don't know if you remember, there's a few backgrounds going on about the sunny beaches
Yeah, I've seen a few of those, but I've just kept it natural, kept it office only.
Yeah. So now Section 24 tax stuff, everyone's horrified by it and so on. And I guess a lot of people are talking about putting the stuff in limited companies, or if they're buying properties new, they're buying them in limited companies. Has there been have the mortgage companies adapted to that? And have we seen an uptake in limited company applications? Is that going that way?
So yes, certainly. So what I would say is, because of Section 24 that came into play in 2016, there is now, because we're in 2021, you're not allowed to offset any mortgage interest rate costs. So everything before, back in the day, if you owned it in your personal name, up to 100% was a tax efficient. You could deduct it from your interest cost, I should say. But because of Section 24, that's not a case anymore. So you're only allowed to deduct to 20% now if you own property in your personal name. So during the last 4 years in particular, a lot of lenders have catched on to that and now have a product offering in by way of a limited company buy-to-let. And what that means is the benefits that you had prior to sort of 2016 still applies. So if you buy a property in a limited company structure, you're still able to offset the interest cost at 100%. Now, we're not tax advisors here at OMB, but what we do suggest is speak to an experienced property tax accountant that can give you that relevant advice. Now, from a lender's perspective, there are around 40 odd buy-to-let lenders in the market, 40 odd, of which half of them, 20 odd, now lend in the limited company capacity. And the reason why that's been growing year on year is simply because of that very reason. A lot of our clients are buying property in a corporate structure because of their tax banding, the size of their portfolios, and because their accountant said to do so. So what we like to do, whether you're a first-time landlord or a seasoned property investor, we like to give our clients both examples in terms of mortgage rates and costs and terms, so the client can make up their own mind with regards to buying property in their personal name or a limited company capacity. Just some highlights you're going to be conscious of. If you're buying in a company structure, the limited company interest rate is slightly higher than owning it in your personal name. You've got to be conscious that you've got to do a tax return each year, so you might have accountancy fees that go alongside that. So you've got to be aware of that. But there are no doubt going to be some tax advantages. But again, it might be advantageous to you, but it might not be advantageous to me. So it's horses for courses, but do speak to a reputable accountant if possible.
Yeah, we usually have one on our round of. I think it's due back at soon, anytime. So that's a perennial question for the tax guys, isn't it? And the stamp duty guys. Now, you're saying, am I right in saying that out of the 40 lenders who do, is that figure right? 40 lenders, only 20 do limited company buy?
Yeah, give or take. There's about 20 odd in the limited company capacity that lend to limited companies, and the others all lend to in personal names.
Yeah, that's an interesting figure, because I thought it would be higher, but anyway, there.
The number has been gradually going up. So every year you'll find a lot of lenders are moving into that limited company space, and I think we'll see a lot more of that in 2022. So when those landlords are ready to pay their tax bill, they're gonna appreciate that their income has stayed the same, but their tax that they've got to pay on that income has gone up, and that's because of Section 24. So I think that will make a lot of difference. And then obviously it's demand. Lenders will tweak their products and their criteria according to trends and demand. So if the flavor of the month is more student-let buy-to-let, lenders will cotton onto that to say we need to have a buy-to-let student offering for a buy-to-let product. And likewise, with the limited company structure, lenders will adapt to that. With regards to limited company lenders, those lenders are more on the specialist side. And specialists, people get it twisted. They think specialist means expensive. And I would contra that to say it doesn't mean expensive, it just means an alternative. And the rates are not too dissimilar to a high street lender that we all bank with, no doubt, on the main high street. So you do pay for what you get. But there are nuances that a high street can't deliver on, but the specialist lender can. You might not have an income, or you might not have an experience, then the high street might not be able to do it, but the specialist can. So that's another benefit of using a broker like ourselves, just to go through all the nuances and then finding the solutions. And that's what we like to do, work with our clients to understand the issues, and then we'll find a solution for you.
Right, and in terms of the rate variation, limited company to non-limited company, what's the? I don't think spread's the right word, but what's the range we're looking at in terms of?
That's a great question. So in terms of rates, so if we were summer of 2020, the limited company rates were hovering around 3.5, 3 3/4. Now, where we stand now in 2021, where are we in October? The rates are as low as 2.79 in a limited company structure from the last time I checked. It might be slightly lower than that now. So the limited company rates are dropping, and that's probably across the whole board, whether that's owner-occupied main resident mortgages, limited company buy-to-lets, or in personal name buy-to-lets. So the rates of interest are coming down, that's for sure, from a lending perspective. The only caveat I would say to that is, and I've done many videos on YouTube, and you can probably find them online, but I've predicted Bank of England to increase interest rates, and I did that in 2019. And I did say in 2021 or 2022, interest rates will go up, and I do wholeheartedly believe that in the next 3 months we're going to start seeing interest rate increases. So just keep an eye on the Bank of America, the Fed in the US, and where the 10-year swap's going, because I can see interest rates going up. So for your viewers or listeners out there that have got mortgages coming up in the next 6 months, give us a call. We'd love to see what we can offer you in terms of interest rates, where the cost savings are, and then that way you can try to lock in those low interest rates that they're offering at the moment, for sure.
Oh, very, very interesting. So would you mind sharing your details? Let's put that on the screen. No.
Sure.
Not that you're not a handsome chap, or you might not be as good looking as me, but I think that this money talks and everything else walks. Is it?
Yeah. Can you see that now?
Fantastic. No, well done. And as you're such a good chap, I put the 50p's in for you instead.
Perfect. I'll return the favor one day, Dale.
Yeah, no problem, mate. So just to pick up something on there.
Yeah.
Am I right in thinking that you've just said watch the Fed's 10-year rate? That's the rate to watch. And if you've got a mortgage coming in the next 6 months, take action now. Yeah.
Yeah, a lot of people think that they have to wait a month before the deal comes up, and that's the last thing you should be doing. You should be looking at your portfolio of buy-to-let investments, or even if you don't own a portfolio and you own your main residence only, please check when your mortgage deal is ending. If it's ending in the next 6 months, now's a great time to contact us. So what we'll do is we'll look at the entire market for you. We'll propose a new mortgage deal for you. You will then obviously sleep on it, have a think about it, and then come back to us. And what that means is we can then lock in that rate once we submit the application in full for you. And then that way, if your mortgage is coming up, let's say on the 1st of January, you're not moving on to the lender's standard variable rate, which is going to cost you an arm and a leg. You're then going on to a very competitive rate in the market. So fundamentally, up to in the next 6 months, any of your deals are coming up, please do contact us. And even if it's outside the next 6 months, we'd love to hear from you. Even if it means, you're looking to buy a property in the next year's time, do contact us. Let us know what you're looking to do. We will set out the process and the milestones that you need to achieve when you're ready. So you're gearing up. So for us, it's about relationships. We know, it's not a deal every time we speak to a client, and we don't need it to be. We're here to set milestones, set the processes, and get you mind thinking as well. So for those viewers or listeners out there that are looking to get into property as well, so we're happy to help you as well.
Great. So the first time, guys, you're happy to discuss the process, give them information, talk it through.
Yeah.
I'm just thinking of all these energy firms, and it used to be the case that in the old days you just stuck with everything, and then all this comparison sites came up.
Yeah.
What you're saying, it's very much similar for mortgages. You've got to keep on the ball when they're ready to go. It's constant switching because they do take advantage of. Am I right in saying they might take advantage of people who don't like switching stuff, basically?
Yeah, no, a lot of, what it is, every day is a school day in this business. And I think in most businesses, every day is a school day. So we can all learn from something. But the last thing we want to do is, pay away money on a direct debit that is unnecessary. And a lot of clients need a bit of assistance around that piece, and we're happy to do so. So just be mindful, you don't want to overpay. A lot of people are coming off furlough as of September. You want to keep your overheads as low as possible. And usually the biggest direct debit on everyone's monthly bank statement is usually a mortgage payment, unless deal like yours has got a Lamborghini coming out a monthly or something like that. But, I've got a mortgage coming out, and that's probably my biggest commitment.
Yeah, sorry, mate. I had to send the Lambo back. It's an emissions problem. That there's new emissions rules coming out, and I don't think the Lambos meet them. So yeah. Anyway, my Lambo is cheaper than your mortgage. What it was, but anyway, it's different story. Because it's a toy Lambo. It's a Matchbox Lambo, wasn't it?
It's all good. It's all in good time.
Look, you quoted some rates, 2.79, and are those really achievable, or is that just the headline?
No, they certainly are. No, it's a great question. I know most lenders put out these amazing looking rates and they don't deliver, but buy-to-let mortgages are very much dependent on the rental income that the property achieves. Numerous lenders have weird and wonderful ways of calculating buy-to-let mortgages, but again, that's our job. And I say to my client, I'm going to ask you a load of questions. Supply me with that information. The finance is my headache. That's my problem. Let me do that donkey work for you, and I'm happy to do that. That's what I get paid for. So we'll ask the questions, you provide the information, we'll go away, compare the entire market, and present the most competitive rate based on the property type, the applicant's income, expenditure, and requirements, and then we will propose the new terms for that client.
Yeah, and something that you said that is also interesting. It's this 6 month period. Don't think of this as go online, click a button, and Amazon delivery. It's here by the afternoon or tomorrow morning. people, we all get used to instant delivery or instant stuff.
Yeah.
Definitely in my field, it's not instant. And, people, I say you should at least allow 2 months to do party wall stuff for certain works. And I can see the silence on the phone because their mind is going, well, no, Amazon deliver the next day. And with mortgages, even worse than very much similar, prepare for that 6-month lag.
Yeah, no, I totally agree. And I think as property professionals, we need to professionalize our means of working, and we need to think more of a holistic point of view. And you got to understand why you're in this business. It's why. So you're here to create maybe a legacy for your family, to build some wealth. And then, when your time is to go, then you can pass it down to your loved ones or wherever you choose. So I think working with the right people around you does help. I think we touched on it at the beginning. You've got to have a good power team around you. I always say to my clients, no question is a silly question. If you're thinking it, no doubt somebody else is thinking it as well. So we've got to work collectively. We don't know it all. Every day is a school day. And even lenders, lenders change their goalposts in terms of the types of mortgages that they're offering, the rates that they're offering, the terms that they offer. So, they change it on a weekly, if not on a daily basis on some occasions, which can be quite frustrating. But I'd rather have it that way than not enough competition in the market willing to lend to you, right?
Yeah. So now there's some people that I'm guessing the smaller portfolio accidental landlords, for them, and this is not tax advice, but if you watch any of the tax guys, they'll say first thing is don't always think you need to move stuff to a limited company. What sort of rates are the sole traders or owner? How do you describe those landlords that still own the property in their own name?
So there'd be buy-to-let landlords that own property in their personal name. With regards to those interest rates, typically, don't hold me to the rate, but typically it's about 1.5% to 2.5%. Again, those rates are dependent on, type of applicant, type of property, loan amount, the loan to value as well. So there are many, many variables that we have to, as brokers, have to take into account. It's not necessarily, as I said, top of the table fits everyone. So that's where we'll probe furthermore into the relevant detail, then to provide the client with an indicative quote accordingly.
Yeah. So what you're saying is understand your own situation from a tax point of view.
Yeah.
And then we've got some content on there if you want to watch that. And then be early, because that gives you more time to look at your rates and where you need to go.
That's it. The earlier you plan, the better chance you've got of succeeding and getting the best rates possible. But again, everyone's circumstances change. You might be a low rate taxpayer in 2020, but in 2021, you might have got, a change in occupation, change in role, or a pay increase, and so on and so on. So you've got to be conscious of tax. And again, if you want to be serious and you want to be to scale a portfolio, or even if you're conscious and you've got a couple of properties, you don't want to overpay tax. Paying tax, I always say, is a good thing because it means you're making money. But what you want to do is get the relevant advice. Every year you should be having that review with your mortgage broker, with your accountant, to understand fundamentally where you are. Are you doing the right thing? Is there things that you can tweak? Is electric car a good option for you to buy tomorrow? I don't know. It's like mortgages. We will tweak mortgages or apply for mortgages that suit the client's expectations. Some people want to just buy single family homes. Some want to venture on to buy-to-lets in the HMO space or student-let space. So, have a conversation, be open and honest with your mortgage broker, because if you're not, you've got to be open and honest. Otherwise, it will just hit a brick wall eventually, and then we'll be like, well, you didn't tell me this, and so on and so on. But we'll do our best to probe our clients and ask the relevant questions.
Yeah. So the other thing that seems to be hot, I'll come to this slightly later on as well. We'll have a chat on that. It's you guys also do development and commercial stuff as well, don't you?
Yeah, so we like to call ourselves like a one-stop shop for anything real estate. So you are right. Yes, we help assist in bridging loans. So for people that want to buy properties at an auction, it's a probate sale, they want a quick closure, a quick completion, I should say. We can assist in bridging loan applications. And again, if somebody applies for a bridging loan, purchases a property, and then subsequently converts a property wants to convert a property via a permitted development or has planning approval, we then can switch on to development finance. So we've got the know-how, we've got the experience, we've got the lenders to hand that we like working with, that we know that will deliver. And with commercial finance, in particular, bridging and development, clients need to be aware it's not the exact same as a mortgage product. So, a lender A could offer 1.99, it's fixed. Whereas bridging and development finance is very much dependent on the actual scheme itself and the property. So we're here for our clients to negotiate the best price in that market. And we talked about 40 odd buy-to-let lenders in the buy-to-let space. In the bridging space, the last time I counted, there's probably about 200 lenders, and of which we only deal with probably 6-7 lenders, because we've got that relationship and we know that they're not going to change the goalposts on the 11th hour and leave you hanging to dry. So it's a very different market. It's fun, it's fast paced, but you've got to know what you're doing, especially in bridging and development, because you can get your hands burnt, especially around the fees, because some lenders will charge you in fees, out fees, fees in between. And as mortgage brokers, we'll sift through that and get rid of all that to help our clients save money and make more money, I should say.
Yeah, you know what? That's super interesting that you've just said that. And I would have thought there'd be less construction and development financiers. But what you've said is there's actually more of them than the buy-to-let guys.
Yeah, there's tons of it because it's unregulated, right? As long as you're not going to live in the property, it becomes an unregulated transaction. So there's more lenders in that space that can offer development finance. So you've got to be conscious of that. But what I would say is with development finance, as I said, it's a very niche product, and there are variances in who they lend to. But it's all about experience in the development space. And if you haven't got the experience, then the rates start creeping up. Just for your development listeners out there, your builder, your developers out there, you've got to be conscious when you're putting together those schedule of works. Everyone knows that the labor costs have gone up because of COVID. A lot of builder developers have moved away, gone back to Europe, and so on and so on. Likewise, with building materials, the cost of plaster, I heard in 2020, there was no plaster around. It was selling for like 5-fold, which is crazy. So you've got to fundamentally put that into your calculations, the cost of labor and materials, because the price that you paid in 2020 is certainly not going to be the price that you're going to pay into 2022. And obviously take into account party wall surveyor. Deal's going to charge you a fee, and if you've got a neighboring property that you're looking to work with or do demolishments with, Deal, no doubt you're going to need your expertise.
Yeah, no, thank you for that little plug and on that. So yeah, thank you for the plug. But on slide, I mean, you talked about plaster. I remember it went to about 35, 40 quid a bag, and I thought,
yeah,
bloody hell. And I've seen this a lot of times. And you know what? I think the problem now is you can't get the damn materials in some of those, and they can hold up your project.
Yeah.
I've had a couple of projects that the owners have said they've had to postpone because they can't get materials.
Yeah.
And going back earlier, what you've said is, check your mortgages, because your wages may be changing. If you're lucky enough to be a truck driver, good luck to you. Happy days to you. And all those truck drivers listening into this, get yourself reassessed, because you might be able to get lower rates from back here. I don't know how many truck drivers we have, but I just can't resist that.
Yeah, the other thing I wanted to add there actually was the contingency. So, when you're putting these schedule of works together, make sure you have a contingency. Back in the day, it was like put a finger up in the wall. Is it 10%? I would actually double that contingency and make it 20% as a contingency, just in case of, unfound costs that you might not have accounted for. And the other thing I wanted to say is, what's the profit on GDV, on the return on investment? Is it 10%, 20%, 30%? I think everyone, when you're factoring in the cost of works and the return on your investment, it's got to be between at least 25 and 40%. I know it sounds like an awful lot of money, But if you're not factoring in those monies, then you might either be paying too much for the site on day one, you might be paying too much for the cost of works, and or you might be underestimating those numbers as well. So just be conscious around those costs.
I totally agree with you. That's the biggest problem. And we're trying to get a QS to do some stuff for us. QS are quantity surveyors. These are the guys that will tell you how much your stuff costs.
Yeah.
In the trade, we call them brick counters, and they don't like that. But I think that's our QS. I've just upset him. He's not going to come on for another few weeks. But just going back on the contingencies, absolutely right. Totally agree with you. I was having a conversation with someone this afternoon. No clue about how margins work. They just want to buy stuff and build. And I'm saying, look, if the market moves 10%, the stamp duty's moved. So everybody's used to the old stamp duty for starters.
Yeah.
You talked about party walls. When I sit there and explain, look, these are your costs, but you're potentially paying for other surveyors. There's multiple of those guys. Yeah. And they're probably going to be higher than ours. So, the strategy I worked out for people dealing with party wall is you have to do the worst case scenario and reel it back in. And then, luckily in developments, party wall costs are sort of significantly minor, but it's the time scale there. And people need to understand that, and they don't always understand that. Sorry.
Is your QS calling you?
Is my QS saying, listen, I'm not carrying any bricks for you? I've had enough of your jokes, and and if you've had enough of my jokes, please feel free. But look, that's a really interesting conversation. In terms of mortgage lenders, are they still demanding your inside leg measurements and blood and everything else? Is that still?
I would say it comes back to working with experienced brokers. Once you have a broker on your side, the broker will liaise with the applicant to understand what minimum documents are required, as well as any other complex documents that you might require. Now, every lender's got a minimum suite of documents that they'll always require, and they're bread and butter. But then it's understanding fundamentally who your applicant is, what's their backstory, and if they're a portfolio landlord, for example, they're going to probe more into your portfolio. How stressed is your portfolio? Do the numbers make sense? Are you paying your mortgages on time? And most importantly, are you declaring your rental income on your tax return? If you say you own 5 properties and on your self-assessment tax return, there is no rental income declared, you can bet your bottom dollar they are going to ask you, why have you not declared any rental income? And it's fundamentally things like that do hold up applications. So, if anybody's going to take anything away from here, if you are a landlord or you're looking to enter the buy-to-let space, it is very fruitful. I still say so in London and the Southeast in particular, but you've got to treat it like a business, because if you don't treat it like a business, I don't think you will succeed. And it's all about becoming a professional in this market, having the likes of a good mortgage broker by your side, other professionals that will help you or better equip you to make a success out of it. But, going back to your question, Dil, yes, they do ask for inside leg measurements, not in those entirety, but again, it's about providing the right information on time every time, and then that way you will, mitigate any forthcoming questions.
Yeah, no, great. And as we're doing shameless plugs, you should always watch our back catalogue of property professional videos. There's some awesome information. I actually had to share something with someone this morning about Linda, who was on earlier, our planning consultant.
Yeah.
Amazing information. I said, look, and she said something really apt at the end of a fantastic discussion. It was full of information. She said, look, you fill in the wrong form, give them the wrong information, you're going to set yourself up for a fall. It's 10 years worth of, you might end up having to wait 10 years to redo the planning. And I'm thinking, whoa, I didn't realize the impact was that great on mucking it up.
And that probably goes back to working with the right people, right? So, if you're looking to put in an application, you need to be speaking to a planning consultant. But more importantly, speaking to a planning consultant in that example that understands that local council, understands that local demographic, and understands what your ambitions are. There's no point just cherry picking any planning consultant if they don't know the local council, the local demand, and what your expectations are. So picking the right people is key, and picking the people that you can work with is fundamentally even more clear in my eyes.
Akhil, look, I'm going to give you time to get your breath back, but can I sneak in a bonus question before I sneak that in?
Please go ahead.
Could you please put your details back? Because I think that you obviously know your stuff, and it would be great if our viewers can use your services, ask for quotes.
Thank you. Yeah.
I hear, well, maybe this, I hear you're keeping your Lambo services undercover, but that's a different.
No, I don't own a Lamborghini, but
well,
maybe one day.
We can all talk about Lambos anyway. No, not in this forum. Look, where do you see the trends for buy to let in terms of broker perspective? So you look, everybody jumps on a favorite hobby horse. A few years ago it was HMOs. Then I noticed the trend. Everybody suddenly wanted to be a developer, and I'm guessing you see this before everybody else. Where do you see this stuff going in terms of buy to let? And give us a broker's perspective on this stuff. What do you see happening out there that we should look out for?
Yeah, no, it's a really, really good question. And, we, as brokers, we benefit from seeing all different types of inquiries. It could be a first-time buyer, it could be a development finance inquiry, it could be an auction purchase. But from a buy-to-let perspective, I would say take into account what COVID's done to the world, not just in England. You've got to be conscious of people need space to work from. So I think rather than a lot of developers trying to create more and more rooms in one house, for example, I think kitting out individual rooms, maybe if you're going to build a 7-bed HMO, maybe bring that back and create a 6-bed HMO, because what that would mean is you'd give each room more space. If you're going to create a HMO tomorrow, make sure it's got the right amount of Cat6 cabling. So you've got good Wi-Fi. Your kitchen amenities are fit for purpose. If you're going to create a new kitchen or 2 kitchens, look to go eco-friendly. So I think going electric is going to pave the way going forward, because all this no gas is going to be around tomorrow. I don't know, but I think becoming eco-friendly, making sure the property is fit, and you're future-proofing for any other problems to come up. But what I would say is, I think that the quality of your end product or your type of property will go a long way, because that will demand higher rents. You'll demand a better tenant, and ultimately you will save money on all the inventories in and out. So I think just recapping there, if for those landlords, I know landlord market has got a bit of a tarnish. Landlords are there for a quick buck, and they don't really care about the tenant, and they don't want to make the rooms all glamorous. But I think predominantly the people that I speak to, my clients, really, really do dress their properties up, and they say their buy-to-lets are better looking than their own houses. And I think that's the right attitude to have, because ultimately you want to make sure that a tenant is safe in the property, it's eco-friendly, as I said, it's future-proofed. Just to add on the extras, make sure it's got good Wi-Fi. Make sure if you've got a HMO, make sure it's got locks on doors. Spend an extra couple of quid and make sure you've got the fancy locks that don't have to have keys. They can have a touch button or a keypad, because that will save money on door keys getting lost, or changing keys or replacement keys. Things like that, I think, are fundamentally that people need to think about going forward. And if you are looking to buy a buy-to-let, a 3-bed semi-detached house, make sure when you dress it up, make sure it looks the part. It's contemporary, it's modern, it's fit for purpose, and always have the end tenant in mind. If your end tenant is a 60-year-old, then dress it accordingly. If they're students, make sure you dress it accordingly. So you've got to have the end tenant in mind. But I hope that helps.
No, mate. I think you might come and do the buy-to-let seminar as well. The development seminar as well. I'm going to ask you for a massive favour. Could you keep us up to date with all the shenanigans going on in terms of rates, and try and give us a regular rate update? Would that be okay with you?
Yeah, I'd love to, Dale. No, thank you for the invite, and certainly, we're here to help our clients, help them with the information, and that's the least we can do is help your viewers and listeners with up-to-date mortgage advice.
No, fantastic. Look, it's been a really interesting chat. Really enjoyed it. I'm sorry we couldn't discuss the Lambos a bit further or the dressing up, but we have to keep it sensible and property related. Really looking forward to your mortgage updates whenever we can get those in. So, Akhil, thank you for your time.
Pleasure.
Thank you for your knowledge, and thank you for sharing so openly. It's been wonderful.
Thanks for having me, Dale. We'll see you soon.
Yeah. To all our viewers, all our audience, look, there's Akhil's details. Drop him a line. If you're kind, you get your stuff on his database. He might even start sending you. I don't know if you do that, birthday cards, but it's a suggestion for you. But
Yeah, all our clients get birthday cards every year. We do.
There you go. Look,
we actually give them. Yeah, we do.
If you're Billy No Bates and you haven't got any friends, sorry. Oh, great. Look, someone's saying, Dill, fantastic jokes, carry on. And perhaps you could be a comedian one day. No, at least they haven't said don't give up your day job, right? So look, if you haven't got any mates, drop Akhil a line. He'll send you a birthday card every year. That's one guaranteed birthday card. Okay. Well, look, Akhil, great fun. We really look forward to having you back in the future. To all our regular guys, you know the drill. Every Thursday, 5 o'clock. If you're watching this on YouTube, usual stuff. I can't remember what you do. Like, subscribe, and all of that stuff. Well, look, we're going to bring you some more guests for some more experts, professionals. Really good stuff. I hope you enjoyed the show. Some great information there. And we'll see you next Thursday.
Thanks, Dale.
Once again, thank you very much.